Good afternoon. Thank you for joining us today for our video roundtable event, Weathering the Storm, How to Maximize Your Texas Property Values. I'm your host, Matt Hudgens, and this is Dick Anderson. He's a partner at HPI Real Estate Services and Investments. Sam Houston, at the other end, is a project partner at HPI Real Estate Services and Investments also. Andrew Levy, Senior Managing Director at Holiday Fenolio Fowler LP in Dallas. So what are some of the changes that you're seeing in the market when it comes to selling, leasing, or refinancing a building?
Well, I think today, if you're selling and leasing, I think the first thing you ought to be trying to do is not sell. And there's a number of reasons, but I think for the most part, investors today are looking for an exceptional investment opportunity, and so you're selling into a very big headwind. The thing that I think an investor should be trying to do today is, one, understand his tenant base and how he can mitigate his risk by how he leases property, and can he needs to really, he or she needs to really understand, does he have tenants that are going to be able to pay rent, or are they going to go out of business next year? And he needs to know them very well. He needs to see, what's it really be realistic about what he can achieve from a leasing standpoint, and really focus on that. And then I think the other thing, if he's got debt that matures anytime in the next 12 to 18 months, he needs to be working on that today, because it takes an enormous amount of time now to find it. It's not going to be as much as you probably had in the past. And it's going to be at terms that are much less favorable than they have been. I mean, it's really an interesting situation where the federal government's trying to lower borrowing costs, and over the last 90 to 120 days, ours have done nothing but go up. I mean, we've seen rates for the last 90 days go up, and yet you see the Federal Reserve lowering the discount rate. You see treasuries going to nearly zero. And so you just have to be realistic that you're not going to get the amount of debt you've had before, and you're not going to get the terms that you had before. So I think working on that early, trying to restructure your capital, and then also trying to restructure your leases. If you're going to sell, I think the assets that have value and have appealed in today's market are ones that are extremely well leased. They don't have a whole lot of rollover going into the next 2 years. I think most investors don't want a lot of exposure to vacancy. And so if you've got assets with a lot of leases rolling next year, don't try to sell those. Try to sell the assets where you have leases that are locked in for 3 to 5 years with good quality companies, and those still have good value today.